Welcome to TheoTrade. This is Don Kaufman. Here we are, October 2nd, 2017. Just moments after the close, quite an interesting day that can only really be described as fractured markets kind of continuing to defy all logic. And by fractured markets, you don't have to look very far to see what I mean by fractured markets. Here we have the S&P futures up approximately 10 into the close, the Nasdaq futures finishing for the most part unchanged. Okay, so clearly the leadership today not coming from the Nasdaq, and last but definitely not least, the Russell. This just gets you shaking your head. When I talk about defying logic out there, if you have not looked at a Russell chart lately, behold the monstrosity. It only really does it justice for me to put this into percentage terms. This is a move, again, that I was elaborating upon this weekend, but a move, when I say defies all logic, that is 10% move straight to the upside. Now, I'm going to come back to the Russell a bit later here in this conversation to show you a trade that I've actually constructed specifically in the Russell and for this week, for the next 4 trading days. Nevertheless, when I talk about kind of fractured markets here and really defying a lot of logic, you have to look at what I mean kind of by fractured. First of all, what's kind of leading the pack today to the upside? Well, the S&Ps got the bump to the upside specifically by financials. Once again, talk about astounding moves. The financials, okay, are almost right there with the Russell in terms of defying logic, in terms of a move. I mean, again, this is the last few weeks of trade. You're not even at a full month of trade, but the last few weeks of trade, that is a 10%, okay, a 10% move to the upside inside of the XLF. And if people are looking where returns are coming from in the S&Ps and, you know, what's seemingly defying logic here, the S&Ps continue to track higher, you don't have to look any further than the financials. Now, when I was talking about with fractured markets, we're getting a little bit like dissension, if you will, in the ranks. You've got Apple, okay, down. And again, it looks almost the opposing of what we just saw inside of the financials. Facebook, okay, Facebook took a little bit of heat today. Google, after having an astounding week last week, Google gives back some of the returns today, being down about 0.6%. Amazon taking a mild amount of heat. Listen, being down $2 for the most part, that's massively unchanged to me. Nevertheless, okay, we get the Nasdaq finishing relatively unchanged. But here's the interesting part of that. When I talk about, you know, fractured markets, the Nasdaq finishes relatively unchanged, but the monsters of tech, and again, the monsters of tech here, it's what I kind of term Facebook and Apple and Microsoft and Google and Amazon added together. I can't get into the whole FANG stock thing. We're calling them monsters of tech. Added all together, they're actually finishing the trading session down about 18. And therein lies, again, what I'm kind of terming a fractured market. So capital now is rotating out of the stocks that have really taken us to the levels that we're currently at, right? You can clearly point a finger and say, yeah, it's been Apple, it's been Google, it's been Facebook that have really not only driven the Nasdaq, but specifically driven the S&Ps to these highs, okay? All right, forget about those stocks for right now, because what's driving us today happens to be none other than the financials, okay? Then you have to, again, look at the Russell. And the Russell now, and here's where we have to do a quick timeout. And when I say, again, defies logic, it is a wild move. However, let's look at some trade ideas. Now, if you're comfortable with the RUT product, fantastic. For this example, though, I'm going to use the IWM. And you can see I've got another order working in here. I'm going to use the IWM, and I'm going to show you what kind of the week looks like and how this ultimately breaks down. The IWM closed this trading session right smack on 150 on the button. It couldn't be any cleaner. You can see here in the after hours, the ETF products and the indices are open about 15 minutes after the close. Nevertheless, one of the trades that I have built in here, we're going to go out and we're going to sell the 150s, okay? And we're going to buy 2 of the 151s. Now, this is a ratio back spread, okay? It's a ratio back spread. Why might you want to do a ratio back spread? Well, first and foremost, the option that we're selling in this case, it's got about an 11.8% vol. The option that we're buying is about what, 11.13. So for the most part, you're selling a slightly higher implied volatility and buying 2 times, okay, the lower implied volatility. So there's a little bit of implied volatility ultimately in our favor, right? The skew, as we call it, is in our favor. The trade is being done for right around a 5-cent credit. Now I'm going to take the trade over and I'm going to analyze it, okay? So we're going to go ahead and we're going to analyze the trade. What does it really break down to here, right, in terms of analytics? Well, first and foremost, if we're at 150, right on the button, and I'll kind of draw it for you. So here's that like 150 on the button. If we move anywhere to the downside, like the market tanks it all this week, we're fine. We keep our 5-cent credit. At the very least, that's going to cover the cost of commissions, right? So great. If we tank, we get to keep the 5-cent credit. We walk away. Listen, these are options that expire when? October 6th. This is this Friday. This is some short-term stuff. Now, if the marketplace continues to explode to the upside, do we have risk? Absolutely. If we closed on Friday right at 151, okay, you could end up losing just under, okay, $1 or just under $100. About $95 would be the max loss in this trade. However, you could mitigate your risks. That's control your risks by closing out of this position, okay, on Friday morning. If we're anywhere near 151, you could actually close this position Friday morning, probably take about half that loss, okay? However, if we continue to explode to the upside like we have been doing, okay, just about a $2 move to the upside, this trade starts to become profitable and really takes off ultimately from there. Now, based on what you've seen lately, you're thinking like, there's no way we could continue to the upside. Yeah, well, we probably thought that back here, and we thought it again over here. But each and every week, again, the marketplace continues to kind of defy a lot of logic. I mean, if you just looked at the last 4 trading sessions, you have to realize, okay, we were at 145, now we're at 150. That's a $5 move in 4 trading sessions. You want to make it a full week? Go for it. And the reason I'm picking 4 trading sessions, well, I just put a trade on for the next, 4 trading sessions. But if you wanted it to be a full week, we traded from 144 to 150. That's a $6 move, which should actually get us blown right through what we kind of call the valley of death here on this particular ratio back spread. Now, given the fact that it has a rather short amount, okay, in terms of time over here, well, that's necessitated in order to get kind of the gamma, the bang for your buck to the upside. But if there is, again, another short burst to the upside, I want to be part of it. But at the same time, I don't want to substantiate any risk to the downside. Like, who doesn't want to trade that, all right, if the market tanks, I'm going to be free and clear. But if we continue to explode to the upside, I want to participate. And that's really what this ratio back spread kind of screams in today's marketplace. Thanks, everybody, for joining us at TheoTrade. Have a wonderful evening. Bye-bye.